Lovely people, yes, we're back. We're back coming at you, and we're going to talk about the floundering Fed of great U-turns. From hawk to dove, she know not what bird she will be. One swallow does not a summer make, it turns out. Anyway, it's gold I'm going to talk about. Not so long ago, I did a YouTube here. And in fact, there was a little playlist of YouTubes. There were 3 parts plus an epilogue, total of 4, where we went across everything, looking at charts, but talking about fundamental indicators of recessional, Great Depressional collapse and decay. And we'd suggested that the time is finally now for gold. And I have many gold friends, and many have been waiting for me to call bull and have been perpetual bulls. And they've had a long time of suffrage, as I've actually called shorts, and then been benign and indifferent. And only more recently have we come out for gold. So let's just go in and talk about the euro, that beautiful currency of political, not economic design. And we pointed out that this is a clear and very distinct breakout point that could actually see 1685 run and overperform to when you're at the 1186 point. So lovely structure of continuation there, and this has continued to move forward over the course of today. As you can see, it's continued to build on it in quite an impulsive manner. But it's the gold dollar that everybody knows, and the key elements of certain prices that you want to watch out. And as I've said, I love the concept of gold. Fundamentally, I'm there, but timing absolutely matters. Same with Bitcoin at December 2018, all the way down, in fact 17 all the way to 18, to the lows at 3,000 after hitting 20,000. So the key level that's been very prevalent has been this one. We actually got some sell-off structure there. Remember, in our doctrine, HVF method, Hunt Volatility Funnel method, key levels are often just run. Yep, just run, numerous times there. Just touched. So you can see that number that I'm trying to circle, it's the blue line, and it's 1350. That is $1350. That has been a critical number, and I'm making the prediction that we have largely got on to the north side of that number now, and what has been immense resistance many times, and seen price sell off, sell off, sell off, sell off, sell off. You're getting the trend, aren't you? Many times since the bears of better part of mid 2013. Hello, we are 6 years at least, going on 6.5 years since the break, the first break of 1350 from the bull highs in 11. And this is my feeling that we're on the right side, the north side of that, and that is a major structural level that has been conquered and cleared out. Now, a lot of it has come on central bank buying. Let's drop the time frames. Many of you will be familiar with this chart. There's a lot of lines on there that are cluttering it up a little bit. For those of you that want a clean look, that's what you're looking at. There's your impulsive move. Let's take it in though and show you a little bit of what we've been doing with that. So let's have our lines back. It'll be slightly less cluttered. This overall falling wedge was our final high 3 and low 3 for our structure of methodology that has generated these targets. It's a lot in that. You'll have to go and do a program to learn. There's quite a bit in the nuances of recognizing good patterns and bad patterns. We needed this to be a nice high up leg and a drift down with clear strategic buying along the lows. So what we're saying about that is, inside a falling wedge you get a constriction. You're getting constriction, all the selling going across the top, but actually the guys underneath are not letting it slip too far. There's tactical buyers. Were those central banks? Who knows? Maybe they're just retail investors, maybe it's institutional investors, who knows. But eventually you stop making lows at those 1267, 1270, and then you got very impulsive up to 1350 and you ran into that sell wall again. Now let's drop a little lower. So we're dropping from the 10 time, the daily time frame, 10 daily. Let's go into the 4 hourly. So you can see that approximate test, but not quite. Then the test and a proper smack back. Now that's set up a certain degree of structure that we actually quite like. And that is a continuation pattern. Yes, I wasn't so mad about this high being marginally higher than that one, but in the end run, this pattern is particularly interesting for us. Again, volatility squeezes lead to impulsive moves. Continuation is your default, and the trend coming into this was up. So therefore, we work on an upside break. And hark, what did we have today? We had our chief Satan, the Fed chair, Jay Powell, spinning his tails of woe and U-turn. That's right. So we actually drew this pattern before there was any break today in a loom on a discussion with my private community on the board, and we were discussing it in here. We were doing it in FX commodities in general, and we were drawing it. Let's go find it. Can I find it in a hurry without boring everybody? There it had started to move. That's when it had started to move. Where were we when we were drawing it? We keep it in a kind of WhatsApp-like structure. I might have to go a bit far back. But anyway, let's move on. We drew that H3 and L3. It could have been actually yesterday. What day was it? It was probably yesterday. Now the Fed spoke, and the rest is history. So very dovish, or interpreted as dovish. They didn't cut rates, but you've got to remember these guys were increasing rates on December. I mean, like, I was stunned. I said, what idiots, they're going to be doing about turn. There was no sustainability in that cycle. And when I say I said that, lots of others did. There's nothing special about me. I don't understand this. I think it has to be deception, because it's impossible for them to be so incompetent, and for everyday average people on YouTube channels and other guys with quite established businesses in gold like Peter Schiff, Mike Maloney, all to see and recognize that there is no strength out there. And these guys thought that America was diverging and they could go on a rate tightening cycle and a balance sheet reducing cycle and all of this. And we, in October we warned, in July we warned of October. It's 33 months from the first rate rise, for which there was not much else that followed for a long time. And they went into December and still, I don't know. Anyway, it's incompetence or it's by design. Either way, you can't stop a good man from standing up, and gold is now standing up. And this is a real impulsive break that's seen it properly clear above the 1350, and our assessment is geometrically it should get through the 1371. And even with quite a heavy after performance relapse, I'm not sure we're going to see 1350 again. You may never see $1,350 ever again, so long as the dollar may exist. It's not a prediction, it's a possibility. I'm just trying to be dramatic. I'm like that when it's late at night, but there is a distinct aspect that that could indeed be the case. So euro, by the way, so gold against Australian, I mean, it's at all-time highs. This thing's making new highs here. I mean, here's your monthly chart against the Aussie. Look at this. Look at this. This is an all-time high. There's your 2011 high, 1843. People only think of the dollar, and we're pumping some dollar strength. We've got a bit of a dollar milkshake theory going on. Other currencies are losing a great deal, and you're making brand new all-time highs and approaching them again on some other currencies. It's incredible. This is a bull market. It is a powerful bull market. We've been waiting for the setup. This is very much in an ascending triangle type setup, so maybe I'll do it weekly and just squeeze a bit more data and a bit more detail on there. But that, any way you look at it, is an ascending triangle setup. And you've been bashing against this level once, twice, 3 times, and there's a little 4th time, a lady, and now a trance lady crossing the line. You know, trance means crossing. I lived in the Transvaal. It was a grey river, grey and murky Limpopo type river, the Transvaal, crossing the Rubicon. He did 1852 for the Aussie dollar onto the other side. So does it change gender because it tranced? I don't know, but it's certainly become a bull. So it certainly transitioned from anything that was remotely bearish. Anyway, I seem to have an over fascination with that topic. I should get over it. It just seems to be pushed so hard. We should all be engaged on it. I'll stop that immediately. Anyway, the others haven't responded yet. This is a problem for now because the bull really starts when silver gets on its bike. And I also mentioned, I don't want to over recap these things. Go have a look at the older vids. But you've got a silver gold ratio stuck here in a rising wedge that is at an all-time high of overvaluation gold to silver. And then you've got palladium that's overvalued to gold, and then you've got probably platinum that's undervalued to silver, which is the next most undervalued. But the silver gold ratio is the one most of you will be aware of. Those other 2 metals, they're all a little bit interesting and obscure and tiny, but they do have very precious metal properties. Anyway, all that chit chat aside, this needs to turn, and its day may come. Its day may come in the not too distant future, and when that happens, for the Elliottian fans, a nice A, B, C, D, when you get that kind of a move where you go from 90 to 30, you have gold break $1,000 for the first time. Actually wasn't, it did about 1,003, but it was down at 680 at the lows of 2008-9, ran to 689, and next thing you wake up and it's like 1927, and at the same time you have silver sort of around $8, and next thing you wake up it's nearly 50. Now that's not quite crypto ICO returns, but I tell you what, there's no sneezing at that little effort. So a move that could be even more extreme because you've gone higher and you're probably likely to come down at least as fast, possibly faster. You could get a final blow off as gold continues to move up and silver lags for a bit and then suddenly decides to get on its bike and does that, and we overshoot to the downside. That could then see your gold at 5,000 or 6,000. And you know, your silver could go through 100, could be $150 an ounce. At some point platinum needs to bottom, but that car aspect that I've already mentioned needs to wash out, and I'm very bearish cars. Okay, so this is what's going down, and the Fed had their little moment today. And the other thing I mentioned, not to mission sprawl this vid too far, was that the yen is my favorite for strength of the FX pairs, non-gold money. And we had a little bit of interesting structure even there on the dollar. So if I just show you there, you can see that going into Mr. Powell's chit chat, again you had a very steep, I should spread this out a little bit, maybe even drop a time frame. Again, you could see that there was something baking. Now you've had a small retrace. It's typical for what they call a flagpole to get a degree of retrace, and you can sometimes get a pennant and you can get a second leg down. So the rest of the market, the European market, wakes up. This is not a prediction. I'm not saying this will happen. You could have it return all the way and they put the genie back in the bottle by jawing it, but I think it's going to prove a difficult one. So you know, you could have something, you could have on the downside. You could have a lot of things. I'm being a bit speculative here, but you often get pennants and continuation patterns after that first sell, after a little bit of a reaction, and the best point is roughly 50% of the flag pole. So sometimes if you have a flag pole and it looks like it's bottoming and it's rallying, you can sometimes get into the short halfway up the main length. So it'd be interesting to see if this rolls over and dips a little lower. Nice structure in there. This is a shorter time frame. What's more interesting, it's best shown on my MT4, which I will go up the time frame for and show you, which I think I did again on the vid, is that we've been short from around here and we're expecting a sub 88, and we call this a first setup in a new trend, which means it could overperform. That's going to be a nasty spike. Look at that absence of bid, by the way, when we hit the October wobble. That is called a major capitulation. Guess what? Not too many buyers of the dollar. That's right, your big favorite global currency. Not too many buyers when it came to unwinding that carry trade. Everyone was getting into the yen. And I think that carry trade's a little bit of a worn old excuse because there's no more interest rates advantage. Anyway, I'm getting into too much stuff. This is mainly about the gold. Bitcoin was a bit slow to get out of the blocks, but does look like he may silently and slowly becoming interested in the demise of the dollar with a little bit of a moving up. I think it's in a little bit of a constraining, grindy like wedge range there, but that's a topic for another day for the crypto boys. So yeah, gold is a bull, and it may well have kissed goodbye to that level. It's up against copper, where let's just get him once and for all on his own to finish on that. He may never see the 1350 again. If he is, he needs to do it now, I think. Otherwise we will be in bigger number land. And as a reminder of how the macro looks, that is the structure that we overcome, and this looks like it's really impulsive and working it through. It's not to say that we weren't impulsive here, but it came from a lot deeper down. This is coming from a lot higher up, and it's generated a lot of squeeze momentum out of that falling wedge and lots of microstructure along the way. So let's have a look at the monthly. How far dare she go? A key aspect, just this, let's just finish on the gold chart on the bigger time frame. You probably, if I put the cursor there and you see that 1350 line, you might be able to make a case for a inverted head and shoulders now on the chart. So if I were to draw, I'll add that in as an additional little bonus point. So we'll go for that 1350 line here. And there's your left shoulder. It's kind of a double head. There's your head. There's your right shoulder. Some would say cup and little handle in there. It's a pretty useless pattern in my view. It is bullish and it is a continuation pattern, and you do have a sort of a higher stop if you were to trade it. But the real value comes on this macro geometry, which if you take the low, I'm going to give it to you roughly 1050 to 1350. Kind of useful numbers, isn't it? 300, 1350 plus 300, 1650 is your target geometrically for this move. Now remember, on our gold euro we had 1680 with a bit of potential for overperformance that could see you run maybe 1700. So you're getting 1650 again. I would expect the target not to be stopped on the dot at. Typically you overrun, so you could be looking at close to 1700s gold, and you've got the euro targeting at around 1683. It seems a natural place to rest. Also, may I highlight, this was a key structural area as well. So after making those targets, you might relapse back. So you could go make the target, come back and base out like that, to respect both these key structural points, 1550 and 1650. And then of course this big 1350, and the 1050, which was the low of the bear market. I have that chart a little bit in log scale. Is it a log scale? Let's just clear that. Maybe it's not. It's regular scale. That's fine. So it does indeed look like inverted head and shoulders as well for a 1650 plus in dollars. Okay, hope that's useful to you. You've had a full blow of the gold, the big XAU, and the silver is lagging. So we get really interesting when the silver fires up. I didn't show you silver. Do I show you silver? Oh, go on then. It's already 18 minutes long. Let's just do the silver. I can't help but do this properly, even late at night. So let's just show you silver as well. This is the silver laggard. This is the high beta and late starter. That is the silver laggard, and that is how she sits. Little bit of a look up today, but still not in percentage terms as responsive as gold. Got a lot to do, come all the way back. This is the reason why we are behind on that XAU XAG ratio. It means we are in very much the early doors where the big brother has to run first. The big brother is kind of like Bitcoin in the crypto market. It permissions the others in time once it's eaten first and had first dibs on the bed, the linen, the loo, and the what's it called again? The larder. Let's stay with the L's. After it's had its first dibs on all three of those L's, the others are let out to have their go. And this is, I think, how it's going to pan out with silver. Anyway, I'm getting far too cranky with the metaphors here. It's time to turn myself over to bed. Enjoy the precious metals bull market, and if you want to find out more about how you could trade utilizing that which we do, and enjoy our community of wizened, well-trained super snipers that are all looking out and setting alerts, making sure we don't miss things, go to themarketsniper.com and do the necessary. Until then, enjoy, trade safe, trade small. None of this is advice. It's all just purely entertainment. Card tricks next time, I promise. Bye for now.